So we're back into the venture capital panel. I will repeat myself. I'm not as important as any of the panelists, but I definitely did my dues for 35 years being in Silicon Valley and starting up the companies, running them in the ground, and actually being able to be successful twice. So that's my thing. And I run Silicon Hill Venture, which was co-founded with one of the Netflix's founder. And so that's my little story. But let me introduce the panel. Start with you. Okay. Here's the mic. Yeah.
Hi, I'm Brandon Knicely. I'm a founder, managing partner of a company here in town, actually called Third Drive Capital. And so we're basically a bunch of operators. So a deep technology background. I jumped into private equity in New York City I was there about 25 years, but escaped to Austin, Texas after the 2009 winter. It was too cold in New York. I'd had enough. And I could come back to Texas and kick around in my boots. But we do a lot of deep tech work, everything from underwater broadband to really advanced AI mechanisms. I myself used to build these kinds of things way back. So I would say I have some operational experience with sort of high dimensional data. We'll just leave it at that sort of about 25 years doing that. So it's kind of fun to hear all the AI conversation, and it might need refined a bit. So that might be a conversation.
Sarah?
Sarah Endline. I'm an entrepreneur in residence and executive fellow at Harvard Business School in the Harvard Innovation Lab. I like to say I live in the ecosystem of entrepreneurship, which always means capital, creating, building. I'm building a new venture now, but I also love to invest in women and underrepresented founders. I'm an LP for SoGal, which is a women-led VC fund, and all of my angel allocations are to women and underrepresented founders. And I think we're passing it to Zoom now, right?
Yay. That's a typical thing here. Not here, but always, at the conferences you've had. A lot of commotions, but we have a fantastic panel. So let me switch over to our guests that are online. And then we have Gosia Karash from New York.
Thank you, Arthur, and thank you, Marty and team, for having me. It's always a pleasure to join those. My name is Gosia Karash. I was at SoftBank for a very long time, for the last 5 years, and I recently left, and together with my co-founder, we are building a venture capital firm. It's called Actuator. It's still very much in stealth, but we are focused on investing predominantly in kind of real use cases of AI, call it deep tech, call it robotics, call it embodied intelligence, basically stuff that leverages the technologies that we all talk about so much these days and love and appreciate, but has very real use cases and tries to stay as far away from the hype as possible. Prior to doing this and prior to joining SoftBank 5 years ago, I worked in private equity, and before that in strategy consulting. And it's great to be with Sarah on the panel, given the HBS connection.
Oh, thank you, Gosia. And so we're actually going to have a continue on. John Cataldi is going to continue on talking about the investments and the venture capital in general. But I will let Jason Fernandez to actually introduce himself first.
Yeah, thank you all for having me. Austin-based venture capitalist, currently in Park City on spring break with the wife and kids. So thanks for having me. I've been running Creci Ventures for the last year and change. It's a new venture fund on the back of Quake Capital, where I was a managing partner for the last 6 years. Creci is largely focused through the through line of democratization of data with the lens towards the built world. We think there's real opportunity within kind of use of intelligence and information within an industry that does things the way they do it because they've always done it that way. And so we're happy to be here and share some insight.
Thank you, Jason. John, can you reintroduce yourself?
Absolutely. My name is John Michael Cataldi. I'm the co-managing partner for the North American Venture Fund. Primarily, it's a environmental, social, and governance impact fund, looking at not just profiting investors, but for the economic sustainability of Native American tribes. achieving that through the set-asides of the tribe and our ability to interact with the government beyond that of just in a lobbyist capacity, but as having a seat at the table. Prior ventures were across such things as biotech, e-commerce, green energy, tribal free trade zones, national defense, and tribal government partnerships. Current portfolio in saliva diagnostics genomics platform, emphasizing on therapeutics, early diagnostic for cancer, PTSD, mental health, and chronic disease. In a prior world, I was the CEO of the Seminole Tribe of Florida. Some of our portfolios that passed through that has done quite well on its exit. So excited to be a part of the panel and looking forward to learning more.
Well, thank you so much. So as we know, like everybody's looking into the venture capital, saying, hey, you're doing downgrading the portfolio companies in terms of valuations, and it's a horrible world. But in a true sense, I see a lot of optimism, at least in San Francisco. I've just learned that from both the investors that AI is the new thing, new bubble that is starting to grow. We've learned from the realtors that there's about 500,000 square feet of the OpenAI office space that is being rented, and that's just like supposed to be like a small deal. So there's definitely hope into the future, especially creating like $1 trillion opportunity. So I think we're as a venture we're going to be fine. But I would say I want to start with a little bit of a fragmented world of what the VC looks like, and I wanted to actually ask you, Sarah, about what I'm seeing right now. That there's a lot of companies, that there's a lot of funds that are being raised by ladies, like women dedicated CEO founders. Can you tell me a little bit about that trend? Because I found that very interesting.
So it's not a new trend, but I think what's interesting is you could probably circle back 10 years ago. So I think Cowboy Ventures is an interesting one to follow because Eileen came out of Kleiner Perkins. She came out of like traditional Sandhill Road and went out on her own. But they just celebrated their 10th year. So it's new. But for sure there is a trend. For sure there's a trend around this idea that if you want the decisions to be different at the table, at the VC firms, you have to have a diverse set of voices at the table. And so in the past, there wasn't really, there was kind of a certain set of people sitting, whether it's Sandhill Road or anywhere around the world, a certain set of people sitting there making all the decisions. So they would miss opportunities, maybe it be consumer opportunities, fashion, you name it. But when you bring others to the table, they see the opportunities differently. So yes, it's a hot trend, but it really started 10 plus years ago. It is not just women, it's women and underrepresented leaders raising capital.
I got it. But just to follow up on this, is there anybody that you know that raised like $100 million funds? Or have you seen anybody?
So Cowboy raised 200 plus in their second fund, but she was early in. I was just with a great VC woman yesterday at a Harvard lunch. Carrie Rupp is True Wealth Ventures. They get wonderful press, but they still feel young because they don't have all the exits yet to show. And if you're going to go raise your second fund, people want to see everything, the performance of the first fund. So women are out there raising for sure, but it's still very early. And so you don't have a full performance track record.
Oh, thank you. I wanted to go to Brendan for a moment because usually we have like a discussions ahead of time, like what it is that we're doing, and this time around, for whatever the reason, we didn't have the chance to talk to one another. So I wanted to find out more about the third drive, what it is that you guys doing, where are you based, and how are you investing? What's your story?
Sure, thanks. We're here, local, actually with you too, right? You're here?
No, I'm in.
Oh, you are? Okay. Silicon Hills, I assume, was the one, right? Okay, anyway. I think one of the things, and just as a side note, I think there's a lot of positive things to consider if you're in the early stage business as it relates to this intelligence wave. Because the people who are going to win are going to be the incumbents, the Microsofts of the world, right? And the people who are going to also win will be the consumers, right? But the challenge is really, how do you get early visibility to deals, right? And it's only going to be through the venture community primarily, right? So we have kind of a new heyday coming, I think, if we're smart, right? And that's always been the issue, if we're smart. The question about Third Drive, we're local, small firm, very niche, deep tech. I'm kind of a former CTO crossover kind of guy into private equity. And so I was one of those guys that built $1 billion business in the 90s, and we saw it come crashing down with the telecom meltdown. And I wasn't happy with what happened at the board level, you know. And so we were one of those guys that were told, build, 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 and don't worry about the capital. And then, and then things went for the hill. I think went running for the hills. And so I was a little concerned about that. I mean, it's just human nature, but I think as venture people, we need to have a better, I just think we need to be better. We need to have better vision. And we shouldn't just be MBA types that, you know, sort of make decisions that follow the crowd. Our premise is that we want to be able to, we think we can do better. We can support founders better. We can be consistent and not just give the same old advice, but actually roll up our sleeves and get involved. So we're kind of the Sherpa that goes up the mountain with you rather than sitting at the bottom and telling you what to do up the trail.
Great. Thank you very much. There we go. Hey, so let me go into our telecommuters here. Gosha, you're kind of like, you're coming in from a VC point of view. You had like the big treasure chest that you could spend almost unlimited money at SoftBank, right? Now you're raising your own fund. Tell us about the difference. Like, how does that feel now?
For sure. Yeah, so I am now one of those women who is raising the fund, to Sarah's point earlier. But starting off on that, I definitely agree. It's not necessarily that new of a trend. There have been great people kind of standing on the shoulders of giants. That's the way I like to think about it. And obviously, you know, Katie Haun raised an over $1 billion fund a couple of years ago, focused on crypto. So there definitely are those examples. Greylock is co-founded by a woman. And so there are definitely those examples, and we as a team, being the female GP and my partner being a guy, we definitely have the aspirations to build something sizable and important and with great returns. That's definitely the ambition and the goal. It is very different than working for a big organization. So what was interesting, what is interesting for me, so my experience within SoftBank was obviously focused on investing, and I made ballpark of 20 transactions during those, call it 4.5 years. But I was building funds for SoftBank too. So the pools of capital that I was deploying the money from were essentially single LP funds within the SoftBank structure. So a lot of the aspects of the business that my team and I had to do and deliver on were really around building those new kind of institutions within a larger institution. So from that standpoint, a lot of what we are doing right now is not necessarily that different. Because just like you do when you're launching a Latin America fund for SoftBank, which is something that I did, or an opportunity fund, which was actually focused on diverse founders there, and going earlier stage, when you build those new things, even internally, there is a ton of processes that you need to think through. Think about, you know, what your diligence is going to look like, what your memos are going to look like. All of that stuff needs to be built effectively from scratch. And there is this inspiration that you have from what the mothership has been doing and how it has been operating, but we were given a lot of leeway in terms of how we want to do those things. So now the experience around building something on your own is kind of like you're replicating this again, but with a much bigger responsibility, and with that added element of you're doing it under your brand. and you need to fundraise. So we are obviously fundraising right now. Before that, while at SoftBank, the capital was provided by the mothership, and the brand was provided by the mothership as well. So this is kind of the major difference, really. But in terms of your usual sources of capital, you still tap into your own network for sourcing deals. You still leverage somewhat similar tools. But we definitely have more freedom in terms of shaping our own theses and what aspects we want to really kind of focus on. We have been, both my partner and I, his name is Will, we were both very active in investing in robotics and AI out of SoftBank before it was cool. So we actually developed our theses together at the firm about 2020. And wanted to deploy more capital into the AI companies already there, and we were doing so over the years. So it was really the decision for us about we want to just focus on that. We want to have even more freedom in terms of the companies we go after, and we want to build something that will survive longer than we can, and really establish a proper institution the way we think will be sustainable and great and deliver great returns to the investors.
Right. Well, thank you, Gosia. Jason, you're based here in Austin, right?
I am.
So why you're not here? That's okay. Tell us about what it is that you do.
So we ran Quake Capital for the last 5, almost 6 years, where we made 300 portfolio investments, largely through an accelerator strategy, much like Techstars and YC. We saw quite a bit of investment within our portfolio in diverse founders, both women and minority-led. It was interesting, without a mandate to kind of look for those types of founders, we found when looking at businesses largely based on their success rate, their metrics, the things that we can measure as venture capitalists that can lead to success. If you don't look at the founders first and you take that piece out of the equation, what you end up is a portfolio that looks largely like the general population at large. X percentage women, X percentage diverse and minority founders. We found that really interesting. We're continuing that founder blind with our initial screening at Creci. I wish I was there, but yeah, family obligations are what they are, and spring break only comes around once a year. So.
Yeah. No, not a problem. You're in a good place. But just continue on. What is your focus like in your fund?
Yeah, so we took a through line through the investments at Quake and took a step back and tried to define what success looked like through that massive number of investments, and it was utilization of information. We call it the democratization of data trend, and it largely kind of tails into what we're seeing today in AI. But that trend was moving at a rapid pace years ago. Companies that understood their market and their customers better than others did better, regardless of vertical. And so we're trying to tap into more of that trend. And it just so happens that, as is everybody looking at AI these days, it's going to be the thing that saves venture going forward. We're trying to focus the aperture a little bit more. Being a generalist fund is hard to explain when you're trying to explain expertise. So we took a step back again and looked at our portfolio and kind of our access, and we realized that we had very strong roots within kind of the built world. So whether it's prop tech or construction tech or fintech in the real estate world, there's real optionality there, and we think there's real kind of room to run. We've noticed that over the last decade and a half of investing, in particular within prop tech, in that specific sector that we're trying to spend our time. Most of that invested capital has been hoovered up by the mega funds, billion-dollar vehicles at large. Those vehicles are full of brilliant people, but they have been investing over the last decade with increasingly larger check sizes at increasingly higher valuations. So in order for those funds to see real return for their investors, they're going to have to get real creative. And if anybody will figure it out, I'm sure these guys will. But it makes it really hard for these larger funds and kind of the real capital available for entrepreneurs within the prop tech world to kind of get investment from an early stage. So Quake was largely pre-seed. Creci, we're moving up in the cap stack a little bit towards seed to Series A plus rounds. But we can take risks with entrepreneurs early in their life cycle, really help them get to that next round of capital, next round of financing, and help the businesses grow, right? Growth for growth's sake is something that has proven probably not to be the best model for entrepreneurs to go chase. It works for a very small subset of the market with category winning businesses. But if you take a step back and look at what could be a very successful entrepreneurial endeavor, you have to run a business like a business. Profit matters. So we try to help our companies get there.
Arthur, I have a little trivia for you. This is South by trivia. So South by has always been scheduled on the spring break for the school kids and for UT Austin. If they didn't leave town, there wouldn't be room for Marty and all of us. So we thank them for that.
Thanks, Sarah. Hey, John, I wanted to ask you a little bit about your fund, right? So I know that it's native fund. So is it only supporting the native people? How does that work? And what
I don't know about with my coffee or downing a protein bar off monitor.
There we go.
It's a little bit different in the way that we have to operate. So it's not just for don't just take tribal businesses. And actually, in retrospect, we take businesses that usually aren't tribal businesses. Tribes are incredibly good at a few businesses: alcohol, tobacco, firearms, and gaming. They, hands down, that is the vice businesses they're very good at. And they're very good at it because they were able to leverage their sovereignty to be able to have an extremely good gain in the marketplace and do things that other companies, other corporations couldn't do. The challenge is when I was, putting back with the Seminole hat on, when I sat on other tribal boards, tribes on average have an 8th grade educational level. And this is leadership that's leading the benefit of a tribe. And when you have when you haven't been exposed to global business or have an MBA or law degree or whatever it may be, when you haven't worked for big companies or haven't been exposed to large ideas or the VC world, you tend to focus in on your microcosm. Trying to get them out of that microcosm has been very challenging. So it was easier when I was at the Seminoles, kind of working on the inside, being able to say, okay, my first venture I ever did in the tribe, it was a gaming project, which was easy. They understood it. And I said, okay, I need 30 million for this venture. Not a problem. We'll go ahead and wire funds today. Okay, great. That was in essence the practicality of the conversation. And it went on with that for several ventures. And these were more roll-ups that came into the tribe. And you may have seen the Seminoles Sportsbook now. That was one of those companies that came in years ago that's finally now, been, forward facing. Hard Rock Energy Drink and others were like that. But when you're dealing with tribes, you have unique challenges that you have to have the understanding of the tribal member or your supporting tribal networks. And that's why in most cases, we don't take money from the tribes, or we don't allow them to have a majority control of the investment from a voting aspect, because at the end of the day, they're going to govern based upon their insight, not necessarily the right thing for the fund. However, there is a cultural fit. We don't get into businesses that will do wrong or evil, such as opiates or payday loans. Those have plagued the tribes a lot and have caused lots of deaths on the reservation or financial hardship. Being good to Mother Earth and Father Sky, environmentally inclusive. And so the fund, we've had 3 funds prior. One of our largest was a carbon credit fund that Shell Energy pledged $1.2 billion for the production of carbon credits, which were on and off Native American lands. And we were involved in one of the largest carbon sequestrations in North America. That's still an ongoing thing given the California cap and trade. Our prior funds that have been in free trade zones, our first one was in ESG environmentals. During COVID, we were very good in passing product during the pandemic. And today we find ourselves focusing on a health portfolio, which is also near and dear to our heart, and focusing on a roll-up within that. In probably the latter part of this year, beginning of the next, we're going to be launching the next Native American venture fund, a specialty fund that will be able to address some unique projects within the marketplace that can leverage tribal sovereignty. The inability to be sued is kind of nice. The tax preference, for every dollar you invest, you potentially find tax credits and discounts, anywhere from 25 to 50 to 100% above and beyond your investment. Being able to write your own legislation, being able to print your own cash. It's a different beastie, and sovereignty law is deep, but also you have to have a good understanding of how sovereignty law is a double-edged sword. If you could do it, you could also invite other tribes to now compete against you, and now being fostered by the war chest of corporate America to be able to get their way. So having all that in mind, we run a lot in stealth mode for a lot of our projects. And when we come out, we usually come out big and strong, and hopefully have at least a year or 2 year plus a head start of beyond the competition. But the biggest thing on the tribal front is all relationship based. Been in this for now 12 years, and my word and a handshake means a lot. And with everybody that has long-standing funds within the venture community, you're based upon not just your returns, but how you treated your investors, both in an upswing, which we all have those, and also the downturn of the market. Are you a guy that will come out from behind the curtain and say, I screwed up, this is what's going on? Having that level of transparency and understanding of both the fund, the market, and your investor, and doing right by them, and you performing. When they perform, you perform. I mean, when you perform well, you get paid. When you don't perform well, you get smacked. And the eat with you kill mentality is also something that we hold near and dear to our heart. So that's kind of it in a nutshell. Hopefully I didn't over explain.
Oh, that sounds very fascinating. But I have a really quick question about you. How do you source the deal flow? And then is there like a mentorship program, or or all the investments are kind of like outside of the tribal thing?
So there is a mentorship program. We usually specifically focus in a few areas, and they all have the same. I mean, AI is nice, but the goal of having AI becoming profitable when a roll-up portfolio, one of the biggest things that I don't want to be an R&D company. If we can't have something and make it profitable within 6 to 12 months, we honestly don't want it. So roll-ups of IP, roll-ups of IP with an active business, you still want all the competitive check marks. And even if it's a small company, leveraging tribal set-aside contracts and other resources that could take a company and, in essence, grow at a quantum leap overnight. Some companies and portfolios aren't sexy. There was a company we invested into early on this was a long time ago. Porta potties aren't sexy, but when you get all of the government contracts for federal contracting in and around porta potties, it's a big deal. So I'm using that as just a kind of a tertiary example of how quickly something can, matriculate. But we always start with our best foot forward and making sure, again, that it's an industry that if a lot of red tape was cut out of the way and there's a big federal contract pool of cash for it, how can we align the planets and stars to be able to capture that pool of cash or grants or what have you to make this an equitable transaction very quickly?
Well, thank you, John. That's very, very fascinating. Jason, what do you like right now? Do you have any dry powder, as everybody likes to call the money? And then if you do, what is the size of investment? What are you looking for?
Yeah, like I said, I kind of alluded to this earlier. We're a little different. We have capital, but we also primarily syndicate things. We like to be the leaders, the scouts, if you will. We do a lot of the due diligence, and we have sort of an engineer's approach to due diligence at the early stage. We have a whole bunch of work we've done on valuation dynamics that we think are somewhat novel, that uses intelligence, if you will, and history. But yeah, I mean, we're all looking for deals. And I think at the end of the day, it's about, I agree with, Jason, it's about the founders, right? And so everything we look at typically come through word of mouth, which is, usually the founders that don't know how to get to the VC don't have enough creativity, probably aren't going to make it. So we believe that it should be, it's very relational business, but we have lots of capital to put to work, both ourselves and through our secondary partners.
And then nowadays, what is the size? I mean, everybody's sort of looking for early stage companies, right? Because it's.
I wouldn't say everybody. I think there's very few people looking for early stage, and those that it's not an easy business. It's a very difficult business. It's much easier to, and I see a few people nodding their heads. You know, the Series A, B, C is a much easier, much more predictable sort of space. It's sexy in the early stage. It's nice, it's novel, but I can tell you, if you did the actual numbers, the actual success rate is very tiny.
No, and I understand that, but
and we're here to make money. We're not here just to be sexy, right?
I'm kind of like following what Tim Draper's doing. He says, hey, I'm doing $60 million fund right now, and then we're gonna do AI, early stage AI, and then we're gonna throw the money at it, right? At like $1-2 million level, and that's what he's doing, right? And a lot of big VCs, they're looking like the round A, B, C, D, and whatever, and those rounds are kind of way overpriced right now, right? So that's why I was saying, like, the early stage, I see a lot of emerging funds that are coming out there to do the early stage, and then there's some that definitely are looking into maintain their investment in around C, D, and so on, right?
There's probably 10 times as many seed funds and A funds.
Okay.
And there's probably 10 times the flame out, the failure rate.
Absolutely.
Which is, it's just part of the job. I'm just saying, there's nothing, I love it. That's the game that we're in, but it's not for the faint of heart. I've been doing this for 35 years. It's, when you've done this a while, it's not, there's nothing new under the sun, right? And it's all about the people. It's not about the technology typically. And typically, if you get the combination of people right and the technology, then it's great. But I'm telling you, the people are messy. We're all messy. Yeah. And what you don't know in the early stage game is oftentimes over 50% of the problems, if you will, of a venture's sort of development is about people. I can't get along with you. We have differences of opinions. We're going to get divorced, right? So it's the messiness. So all I'm saying is once you get to Series A, B, you've at least moved beyond some of that ugliness in the early phases. Now, I love the game. We think you have to be visionary, but at the same time, it's a very high risk, high reward game. Would you like to have invested in Apple or Microsoft in their B or C or D round? Yeah, why not, right? It'd been a good investment.
Hey, everybody has their different levels of comfort, right? One goes up to second wife, and then the other one goes for other things. So yeah, I totally understand that. I got it. But going into the future, Sarah, you kind of like you understand from academics' point of view of the actual trends and what motivates the young or mature people to raise their funds, and also you understand what are the trends in general of where the money is going to, right? So can you tell us a little bit about what you think that the newest trends are? We know about AI, we don't have to repeat it, but that's the name of the game right now, right? And there's a whole bunch of orphans that are out there that are asking for money. But can you like show?
Yeah, it's a broad question. I feel like everyone's talking about AI, but to me, what's really important is to choose your lane, right? I love that you're really clear on the lane you want to be in. And we need people up and down the funnel of capital, right? So if there isn't someone like Jim Breyer, super early stage, going into Facebook, placing a bet, then would we have Meta today, right? So it's, to me, having a thesis and having conviction and authentically going after it is super important. So I don't want to say, oh, AI is the trend. To me, it's about, like, if you look at Gosha, she's leveraging where she's already built things and invested at SoftBank. She has deep conviction around deep technology, robotics, and AI. She's not trying to follow a fad. She's following her intellect and her beliefs. And so that's an example of what I believe we should all be doing. And not everyone needs to do hardware. Not everyone needs to do enterprise. Not everyone understands consumer. And certainly AI is not new. It's like, I was having a conversation at a tech conference last year with an investor. He's like, yeah, I got my AI degree in 1987. So let's not fool ourselves, right?
Does everybody remember Clippy? Microsoft's Clippy? That was
That was
generative
beautiful.
AI 5 years ago.
And it's like, is gaming new? I don't know. I mean, I played like Atari. So I just, again, conviction around what is your expertise? What is your passion? What is your knowledge? What are the lanes you want to be in? And if your lane is also women and underrepresented founders, because you've been reading the reports that diverse teams perform better, and so that better be part of my thesis, but I'm going to cross industries with that thesis, then go for that as well.
Let's make one comment. I love that. I think that we have to look at history, right? Nothing new under the sun. We had the internet. So much like AI is a wave, we had the internet was a wave. It was an opportunity, a platform for doing lots of things, but it was connectivity. And then we had mobile devices, smartphones, which is another platform, wave, right? But think about all the ways that's been levered, we would have never thought about. Same thing with AI. We just keep moving up the stack. Now we're talking about software layer and data, which is massive opportunity. And there's so many facets of it. And very few people are going to build platforms like OpenAI or all the others, because they take $100 million to get started. So the question is, how do you use those things and apply them to property tech and to other sort of facets of real life, healthcare, medical, proactive health. There's a lot of fun things that are coming that I'm not smart enough to predict. But what I do know, if you look at the history, it's always people that have had a strong foundational technology background that really made those substantive moves. But you need the capital people as well. And that's one of the funny things. But do the capital people and the engineers get along? That's a whole nother conversation. And can they get along with the salespeople? So I like the people side of this. Right.
So there's an Indian billionaire, I don't know his name, but he was quoted 10 years ago saying that he's an engineer, and he said that engineers build better societies, not politicians. I just,
well, I mean, you think about the only two options, Marty.
No, but we're in a lot of respects, we rely on what the Romans developed in terms of shipping 2,000 years ago in terms of our viewpoint towards pushing goods around the world, right? Mm-hmm. So that was engineered. So, but I
would broadly call that entrepreneurship, right? Massive innovations, whether they're engineers or not. Entrepreneurs create more impact in the world. Therefore, the impact investing class, that's why it's here, is because government can't innovate the way that entrepreneurs do.
So I do have one question, and I'm going to give the mic back to Arthur. So I've been doing this for more than 20 years, and I've seen every type of VC, et cetera. But I've kind of come to the conclusion, and this is why I think Tim Draper still succeeds, for people that have read the book 0 to 1, which is that you really want to be doing something brand new, because iterative changes they may be nice and you might make some money, but they're not epoch changing where you're like if you invest you get a yacht from that, right? So what are the epoch changing items out there? So I actually did a little study with ChatGPT. I said, give me a list of every important public company that's come out of venture for the last 50 years, and it gave me a list of 50 amazing companies, and each one of them was like, you could identify social media, hardware, whatever, some kind of platform. And so if everything was zero today and you were starting out brand new, we had all the old companies, what would you be investing in? I mean, I see Gosia as being probably an incredibly relevant area because she's in robotics and AI, and because of space, you need both to be able to do them. And I would add in human genetic engineering to be able to do any kind of space travel. So what are the revolutionary things that we're viewing invest? I mean, so if I create a company that gets bought by Google, you're not getting a yacht for that. You're getting a boat, right? So I think you need to think about right, because in Google, Microsoft, they're all buyers. They've acquired 250 companies each over the last 20 years, right? So they buy. So you're limited in what you can do as a startup because somebody's out there waiting to buy you. You're not going to go and do an IPO. Or maybe you get an IPO, but you'll get bought anyway. So maybe Gosia can start, and then the others can answer. Really, if you were talking to an investor and you said, this is going to get you a yacht, what would be the angle you would take?
I've got one, Marty.
Okay.
Specific, and here in our backyard. Austin, Texas, which isn't really known for, it's known for a lot of tech interest, but not a lot of deep tech sort of, I would say, successes, right? Had a couple marketing successes, et cetera. But there's one, I won't tell you the name, so a little tantalizing. But I'll tell you it's at the intersection. Imagine if what they're up to is basically powering human connection. If I look at Marty, there's probably, if I tried to describe you in about 50,000 dimensions, you'd have a certain space dynamic, right? Sarah, the same. But imagine if you two met, the intersection is a whole nother thing. So imagine at scale, we could actually look at human dynamics. So think about if Google and Amazon and Craigslist had a baby. That's one of the things that we're looking at, that we're very excited about. And, sort of stealth. But the ability for us to, on a global scale, to be able to combine intelligence modeling with a cryptocurrency that allowed to actually reward good behavior, almost like a gravity of good. If you're worth, if I can do a handshake deal and you actually do what you say you're going to do, your integrity goes up. So we have a reputation score and a currency. Imagine on a global scale redistributing wealth. We're talking about massive shifts. And I talk about Marty says the epic moments of the 0 to 1. That's the only one that I know of right now. And it's pretty exciting, and it's here in Austin. So.
Yeah, how do you actually
Gosha answer.
Yeah, Gosha, answer it.
I mean, I don't think I'm going to surprise anyone with the answer. I mean, we are obviously, I am personally, and we are as a team, super bullish on physical applications of intelligence. So basically robotics, it's a fascinating world because it is clearly behind what can be done with AI. Sorry for again using the ugly word. On the software side, right? Because there's just much more that you need to build. In other words, if you want to build a robot that's useful for certain use cases, you still want it to be intelligent. So all of the software stuff and the research breakthroughs that have now kind of embodied themselves in software and in ChatGPT kind of go into it. But it's not just that. There's other like physical problems that you need to solve for the robot that you're building to be actually useful, being the form factor, the athletic intelligence, the hardware, all of that, the batteries, all of that stuff. So that makes it more difficult, but the market for it is obviously gigantic. Now, will building a great robotics company get you a yacht? Probably. What's tricky about that, though, is that like with everything in deep tech and in biotech, you just need to spend so much resources to even get there. Like building software companies is super easy. Even building AI-based software companies is relatively easy, especially if you're not building the models yourselves, because a lot of the you don't need to spend a ton of money on experimenting with hardware or on building a lab the way you do in biotech. It's easier. It's easier to experiment in those fields. Versus here, when we're talking about the physical world, it's much more difficult. But if someone does it and does it well, there is incredible value to be created, and we're already seeing it with a bunch of companies. There was an article in New York Times yesterday about covariant. I don't know if you guys saw that. That's one to see. We actually met it. You asked me earlier why leaving SoftBank and doing this on your own. I actually met Covariant when they were raising Series A, and SoftBank didn't want to invest, even though I pitched SoftBank on this idea. And now it is the company that's like the premier player within the robotics space. So there is, so I definitely see amazing opportunities within the intersection of intelligence and the physical world.
Jason, I actually have a different question for you, unless you wanted to follow up on whatever Gosha said.
No, please.
Yeah. So my question is geopolitical. So here you are in Austin, right? And then we have Elon Musk moving the Tesla from Fremont here, and somehow we're not feeling threatened by that. But I just wanted to find out more from your point of view. What does the deal flow look like? And then do you think that you can actually manage to grow a company from zero to, let's say, unicorn status solely on the soil of Austin, Texas?
I do believe Austin has the DNA necessary in order to build juggernauts across the board, right? We, for a long time, you know, and I think I am coming up on year 16 in Austin. Austin has represented promise to the venture capital world. I think in the last 5 years, in particularly, you know, from the pandemic on, we've seen it kind of advance. But there is a need for capital to play outside of the coasts. There are fantastic entrepreneurs. There are excellent institutions. There are celebrity entrepreneurs and investors themselves moving to Austin left and right. And I think it's largely because there's an interesting thing in Austin, right? You're expected to be good at your job. You're expected to be a good person. If you have sharp elbows, you get run out of town. And you're expected to kind of you know, and it's something that we look at very often, both within our company and with the companies that we invest in. We would like to see a rising tide mentality. We want people that emphasize the team, not just the individual. And I think that's a pretty Texas way of looking at the world, right? It's we're all going to get there together. One star on the flag type of stuff. But yeah, Austin is there's more capital, there's more people. You know, I think with the distributed workforce that we're seeing right now, you don't have to be in the Bay Area or in the Northeast in order to do really good things. Your staff is not going to be under one roof.
I totally agree with that. I was just curious to see if there is any like a leading companies that you know of that are on the trajectory to become those unicorns, and then they're kind of like standing on their boat.
And maybe before Jason jumps in, I'll just jump back into history as an outsider because I'm not biased. I don't live in Austin. I love Austin, but I have these conversations with my Austin friends. We cannot ignore the fact that UT Austin and IBM had a massive presence here. Then Dell was created, massive presence. Then Trilogy recruited a bunch of talent. It was landing here in Austin, right? So you start with talent. You start with a great university. You start with a company like IBM, and now Jason can tee up what's happening. But the historical foundation in Austin, Texas is real.
I think that's exactly right. We have the DNA to kind of build a massive venture ecosystem here. If I were to call out individual companies, I'd probably want to do some within our portfolio, but I'll be remiss and not do that. But I think there are founders that are on the bleeding edge of what success can be in their respective verticals. I think from an investment perspective, it would behoove anybody who is a GP to take a hard look at Austin-based businesses. They are growing both in stature and expertise. And I think it's going to be really exciting the next 5-10 years here in Austin with what's being built in our backyard.
I think there's one company that they're probably beyond unicorn status now, but Data.World. I like Brett Hurt. He's been Bizarre Voice, and he's done a couple others. But I think Brett's led the way here in Austin and over the last couple of decades. And what they're doing with data, open data, and their data analysis platform, creating semantic constructs, catalogs, that's going to be a platform company for enterprise data.
Yeah. Actually, to Jason's thought there as well, besides him having his portfolio in Austin, Austin has some amazing food. Texas as a whole has incredible amount of infrastructure as far as data and pipe. You have leading universities, you have a highly educated populace, and on top of everything from a logistics aspect, you have a great logistics and warehousing. You're mid-country, so you never have to pay the highest market rate from East Coast to West Coast. You're always right in between. So by far, we have a base of operations in Dallas, or in Urban. So it's not as great as Austin from a food aspect, but I applaud you for your choice of venue.
John, I love the food aspect, and thank you for mentioning it, because let's not forget Whole Foods was created here, right? Amazon now owns Whole Foods. World HQ, the organic food movement started in Austin. That spawns a whole other set of entrepreneurs in another space, food tech, ag tech, etc.
Cost of living too.
Yeah.
which is going up and up and up. Thank you. All of you people making it popular. Elon Musk tweets out that it's going to be huge and everybody comes. But anyway, it's great. I was a transplant, so I can't argue against one of the other things that hasn't been mentioned, there's about when I first came here, there was about 6,000 nonprofits. There's a lot of heart in Austin, Texas. People are trying to do things for the betterment of society. I think that trickles down, and I think Jason alluded to it, there's a DNA, there's a culture, if you will, that we don't like it when people come and honk their horns. When the light changes, we don't in New York City, you get that, right? But here, we don't like that, right? We like treating people well. And I think in general, in the human nature, we want to treat people well. So there's a lot of heart. And I think I really appreciate when people sort of embrace the local culture.
Oh, I love it. I love the culture of music, artistry, and so on. I'm kind of raised more on a curiosity in saying, okay, is it really possible to overcome this behemoth of Silicon Valley and create something that is just independent, growing from its own?
Can I make a comment on that? Because
I'm happy
actually, Jason, go ahead. Go ahead, Jason.
Sorry, I'm a little bit of a lag.
We're just talking here.
I'm not sure that will happen, right? I mean, there's too much momentum for Austin to kind of take pole position. But I think as far as a growing ecosystem, one that can make a real dent in what venture capital can look like around the globe, I think certainly Austin's in a great place to kind of represent that.
Just from a founder perspective, when I raised my first sort of Silicon Valley Sand Hill money, it was about $60 million Series A. I couldn't get it done in New York City. New York City, back in those days, only had, the investment banks. Now it's a completely different ecosystem. But Silicon Valley still has the visionaries. And one of the things I'd like to see Austin embrace, and especially as the capital people ourselves, is to have people who get technology, who actually are visionaries and can put money down in the early stages with some confidence. We don't have that yet. We're getting there, but as it relates to a scale of, I would say, Silicon Valley, Boston, and New York, we're just not there yet.
And I think it's not a competition. Having spent some time in Miami during COVID, they have the gateway to South America. They have, Spanish language in their technology. Like, they have a certain advantage. And so, again, choose what is your advantage. I love your comments about what's special about Austin, the spirit, the teamwork, this wanting to give back. So I don't view it as Austin has to beat Silicon Valley, New York, Boston, or Miami needs to beat, the other city. It's literally, again, back to leaning into what's truly special here in the place where you're operating.
All right. Thank you so much. I think that we have any minutes left for closing? No? Okay. Well, thank you very much, the panel. That was great.